You are in for a treat. Not only do I have a special guest, this special guest is someone who is already an executive in the mortgage industry. It's a she and not a he in an industry dominated by pale, mail, and stale. Her story is amazing. She represents everything that's great about the future of mortgage lending. And she's going to not only share her story, but help us navigate the do's and don'ts of what to do when you are going through an acquisition, how to do it successfully, and what to look out for. Mortgage professionals, my friends in the mortgage industry, this is an episode you don't want to sleep on. Check this out. Ladies and gentlemen, boys and girls, children 18 plus, you are tuned in to the Loan Officer Podcast with me, Dustin Owen, and a very special guest, all the way in from Texas. She is the COO of Lower Mortgage. If she's not working, you probably will catch her at a softball field cheering on her daughter. She is the one, the only, my friend, my colleague, Selene Kellam. Selene, welcome to TLOP.
Thank you for having me.
Yeah, I'm so stoked that we get to do this. Here we are on my last official day of actually working with you as a colleague. I look forward to working with you for years to come as a colleague of the mortgage industry and on a as-needed project basis. But I'm happy we were able to connect in person. Here we are in Columbus, Ohio. It's Lower's annual sales conference, Elevate 2025. And you have a story that, to me, is inspiring. It's empowering. It's everything that's right about our industry in terms of like how you got into the industry and where you are today. And I want to take the audience on a journey, the Selene Kellam journey of, everything that went well for you, what you learned along the way, because there's other people who are younger in their professions who are going to pull inspiration from it. But you also had to navigate an acquisition just 18 months ago. And we are still in 2025. And when I prognosticate into 26 and 27, I'm still prognosticating more mergers and more acquisitions. So there's people all the way down from a processing assistant to a loan officer to a branch manager to a company owners that themselves maybe haven't experienced it, where you have firsthand experience. I mean, you were a CEO of a top 100 IMB that was absorbed and purchased by Lower Mortgage, and you got to navigate that.
Yes.
So my goal with this episode is to spend maybe 10 or 15 minutes on your story. Then we'll spend 10 or 15 minutes on giving the people some tips and tricks and advice for navigating successfully a merger or an acquisition. Then we'll find a way to wrap it up.
Okay, sounds
that
great.
Sounds good?
Yeah, sounds great.
Anything on your agenda that we have to make sure we cover today?
No, I don't think so. I mean, I will lead with this, that it hasn't come without a lot of bumps and bruises, a lot of great challenges, and maybe some extra gray hair.
Oh, beautiful. Well, you do a good job of hiding that gray hair. And, everything that we do comes with bumps and bruises.
100%.
I mean, if it was easy, everyone would do it.
Correct.
Or if it was easy, they wouldn't need us. That's what I tell people. If it was easy, they wouldn't need us.
Well, that's why you got top producers that are top producers.
Yes, we do. So let's do this. Let's take a moment, take a quick break so we can hear from today's show sponsor. Then we'll come right back. Shout out to our sponsor. Today's sponsor of the show is Lower Mortgage. Shout out to Lower. Yes, they reached out and they said, look, we are on a mission to represent mortgage lending of the future. We're already a top 25 lender. We're already funding $500+ million per month. We feel like we are on a mission to become the most respected lender in the country, a top 10 lender in the country, by helping our branches and our originators become top 5 in each of their markets.
That makes sense.
They're going to dominate traditional networking, online networking, and creating a work environment that is tech-enabled, future forward, and one of the best places to work. So if you're ever interested in learning more about Lower, and you don't want to take John's word for it or my word for it, okay, they make it super easy. They offer a no pressure, anonymous, no questions, hop on and let us present to you why we are doing what we're doing, where we're trying to go, and help you kind of look under the hood without being recruited. Look under the hood without the sales pressure and all that comes with like being recruited, that sometimes if we're not ready for it can be a little bit icky. So if you're ever interested in being included in one of those calls, I believe they call them Lower Launchpad. All you have to do is reach out to my guy, Connor Bartley, over at Lower. His email, cbartley, that's CBARTLEY, at lower.com. Connor can make sure you get invited to the Lower Launchpad. You won't be sold, you won't be recruited, you won't see your face, and no one will know that you are on the call, but it gives you an opportunity to look under the hood. All right, so let's do this. You got into the mortgage industry when?
2008.
2008, and did you come in as an originator? Did you come in as a processor? How did you enter the industry?
Funny story, is actually a temp. I was doing recruiting, ended up leaving that job. There was a temp position open to be able to take phone calls, ultimately applications, and ended up landing with back then HomeSource Mortgage, which was a small IMB in Georgetown, Texas, and kind of started there and just fast tracked.
Yeah, and that company became Georgetown Mortgage, which later became Thrive Mortgage.
Correct.
Thrive Mortgage is where you were the CEO.
Correct.
When Lower Mortgage purchased Thrive.
Yes.
Okay, just to fast forward a little bit, do some foreshadowing.
Yeah.
So you were recruiting. Is that what you did coming out of school, was recruit?
Yes, more staff recruiting. So it was fun because it was an opportunity to recruit individuals that were looking for employment, but the element of that also was sales. So you had to actually go find the employers that wanted you to recruit for them. And that was fun and difficult, especially being in my 20s, cold calling right out of college. Learned a lot from it. Obviously realized that I liked sales, but I also liked the people aspect of it. So I always said, like, if I was going to give up my ops job, I definitely would go back into recruiting or sales because I love it.
Now, besides the refis you did early on in your career, did you ever go all in as an originator, or has most of your career been either in training, leadership, management, or operations?
No, I would say a large emphasis was on origination early on. I did even keep my NMLS just because I wanted to be able to have the understanding of a loan officer. I will say that while processing was the majority of that first, part of my career, getting into the training, support, the onboarding piece of it, that was probably, I'm going to say, the most rewarding and challenging and I'm going to say learning opportunity for me, because those originators were looking for you to like teach them everything. They were coming into a new organization and they needed to be successful and be successful quick.
Okay, so I'm gonna go back to 08. 08,
Okay.
You're a temp and you're working in post closing. But then by about the end of 08, we started getting some economic stimulus, some quantitative easing, right? Some hardcore QE coming from the Fed. Rates are dropping, so now refis are pouring in, especially back then, lots of FHA streamlines. I remember, like, as an originator, I was like a day away from calling my dad to have to get a loan. And rates dropped, and I loaded up like 5 FHA streamlines, kind of like saved the day, saved the year. I was able to pay my bills and not have to borrow money from dad. So you started originating pretty quickly because people were walking in, they were wanting to refi, and you all were short staffed. So like, hey, grab the new girl.
Yes.
But you went from a temp working in post closing to CEO at the same company. What was that time span? I guess 08 to 23. So you're talking like 15, 17 years. Mm-hmm. Okay. So within 15 years, you went from temp to CEO. This is where I want to dig a little bit. Okay. So you eventually went from doing the refis to working as a processor or working in the operations department?
So processing, and some of that was a lot of broker business back then too. So we were still doing stated income. So that led an opportunity to learn kind of more of the underwriting piece of it a little bit too. But pretty much got a paper back then, was still like left side, right side pieces of, folders. And I got a checklist and I didn't know what any of it meant. And so I just started Googling, like, what's a 1003? What's an FHALT? So there was no training department back then. There was no real support. And so it was just Google and go. Google
and go. So you learned the mortgage business by your friend Google.
Yes.
Yes. Like, you're like, what does this mean?
Now
I don't know.
GPT would be like amazing.
Yes. No, you didn't have that back in 08, 09, and 2010. After you were processing, what pushed you? Because I know from us working together and being friends now, like, you went hardcore into training, right? And then you all were growing as a company, so you're onboarding branches. So I'm assuming you're on the road, you're onboarding these branches. But how did that transition look for you? Like for someone who is the next Selene and they're currently working for a really good company and they like the role they're in, but it's not their forever role. How were you able to navigate going from processing to in-house training to onboarding branches?
Well, at least I feel like I should share this about myself and where this comes from. When I was a kid and even a teenager, I could hit like a triple in softball. And I'd come in and my dad would say, hey, here's how you hit a home run. He would always tell me like how I could do better. And so that's where I think it always has come from is my dad, while sometimes I wanted him to say, hey, great hit. That was a great triple. He was always just setting me up to challenge myself to go bigger and go better. And so when that opportunity came, obviously at the time, Roy Jones was growing the organization. We were having a lot of new branches pop up, primarily in Texas. Started to get outside of the state of Texas, and we were growing really fast, and he needed somebody that was going to onboard these branches. We didn't have an IT department, didn't have a marketing team, didn't have a training team. And so pretty much put me on the road. I was just I think my daughter was 6 weeks old when I hit the road. In fact, I had my dad drive me to a couple of the onboardings, so I could navigate all of this. But I started hitting the road when Zoe was 6 weeks old, and opportunity was to help him grow the business. And I looked at it as that triple to home run. It's like, hey, this is how I learn more. I was really nervous about it because there was a lot that I did not know yet in the business. But that's why I tell everybody, that position right there is really what catapulted me into other opportunities, because as a trainer and onboarder, somebody that you're essentially working with these originators that are choosing you in that organization, I didn't want to disappoint them. If I didn't have an answer, I had to go figure it out. Yeah. And so some of that was internally, some of that was externally, working with, external partners in that. But I did that and I loved it. And why I liked it so much was not just the onboarding and the support and the learning that came from it, but then even like post onboarding, part of it was just making sure that these branches were successful, like doing a kind of 6-month review, like how are things going? What can we do better? And so created a lot of what I like to call like think tanks from it, would bring in all the operations teams and look at opportunities to remove friction, look at opportunities to do things better. There was a lot of processes that were borrowed from other companies, not exactly the way they did it. I'd like to say we enhanced it and made it better. But that position alone and that ability to really onboard, support, and then bring that into operations was probably my most favorite job.
So if I were to put a quick summary on this, you are someone who good enough never is. You get it from your dad,
Yes.
right? Good enough never is. Doesn't matter what you did, you could have done better.
Yeah.
And that's a weird, sick psychosis sometimes because look, people like you and I, it propels us, but it can be mentally draining and emotionally draining if we allow ourselves to stay in the gap and not to celebrate the gains.
Yeah.
But that worked in your favor, right? Being that way, you are hella hardcore resourceful. Like you didn't wait around for someone to offer you training or to send you to some workshop. You're like, no, I'll Google that, right? And then
Google and go.
Yeah, and you had a leader that sounds like he was pretty empowering. Like it was like, hey, if you want to go do this, go do this. Like you got 100%. It. I believe in you, even if you didn't know what you were doing, and you're a solution-oriented person, right? So if someone's like, hey, I want to be like Selene when I grow up, like what are 4 things? Well, maybe allow yourself to live by that good enough never is. Be hella resourceful. Find a leader who's going to empower you, even if it's to empower you to go out and make mistakes, empower you, and then make sure you're a solution provider. Looking back on your career, what are some things that you did that were very impactful to get you to where you are? Because none of us get to where we are alone, right? Like I don't care where you are in life, someone helped you get to that particular level. And if you're trying to go 3 levels above it, you're gonna need other people or organizations or invest time doing certain things. Like I know you and I share our love for the NBA. Like was that something that was instrumental in your career? And if so, how?
Yeah, absolutely. So, being a young female in the industry, it was like, what are the resources available? And I did get involved with the TMBA. I was very thankful. And I think the TMBA, which is the Texas Mortgage Bankers Association, is a really strong association. Large, lot of resources, and got encouraged to apply for the scholarship to actually go to the Future Leaders program there at the MBA, which is the national.
So you did you and I both did the National Future Leaders. Okay.
Yes, but I got the scholarship from TMBA.
Oh,
so,
how cool. Okay.
Yeah, they call us the Wooten members. And so myself and 2 others from Texas got sponsored to go. And that would have been in like 2019. That was a really good time for me to be around other, I'm going to say young professionals and mortgage bankers across the industry. I made some long lasting friends from it within my group. I think that project alone and working with others, that essentially you're creating a company and creating some stats and some, pitches that you're ultimately giving in front of a board there later in the year. And you're doing it with these individuals that have lives, have, their mothers or fathers like myself, and, they're running organizations or running their parts of their business. And then at the same time, you're doing this. And so, that has a lot of grit and grace that you have to learn from that. And so I think that was great. Other things that I did, I was able to get involved over a decade now. Arch started inviting me to an executive women's conference.
Oh, wow. ArchMI.
Yes.
Shout out to ArchMI.
Yeah, absolutely. And I had to be in the C-suite. So this was at the time once I was becoming chief operating or operations officer there at back then Georgetown Mortgage. But, getting involved and being around, I'm going to say very tenured individuals and women executives, that was amazing. So, I was in my 30s, barely in my 30s at that time.
Wow.
And I'm going to these lavish, places and meeting with these women and networking and talking about business. And I was very intimidated, but I learned a lot. And then same thing, I kind of gravitated to 1 or 2 individuals and stayed in touch. And as I was going through my career and learning a lot of things, I could call them up, send them a text message, shoot them an email, ask questions. And so that was very impactful as well.
Yeah, you expanded your network.
100%.
Right? You found your tribe, right? You found your tribe because when you're in the mortgage industry, like I make fun of the mortgage industry. It is pale, male, and stale. And I joke, I can't change the fact that I'm pale. Trust me.
I feel like that's changing.
I have tried my whole life to not be pale. I can't. Now, I guess technically I can change being male, but I don't want to. I really enjoy being male. So at that standpoint, the one thing I need to never be is stale, right?
Yes.
But and it is changing. Like our industry is slowly changing, but there aren't enough yous in the C-suite, right? There's not enough women that represent in leadership.
But I would say, even just looking back over the course of the last decade, I remember going to the first, MBA events. And to your point, I was a very rare individual in that. I feel like that's changing. Even just coming out of the MBA, I think there's a lot of females that are in the space. I do feel like that females are taking a seat at the executive office. So I feel like it's evolving.
Yes.
Maybe to your point, it's still slow in the evolution. But just in the last decade, I think it's
But you know what? Everything in mortgage is slow. Look at our inability to adopt tech. We are slow.
My foot is on the gas.
It is. It 100%. So let's talk about this because we've got to know you and your story, right? And it's a great story. There's plenty of takeaways and tie downs that we've already shared.
Can I add one more thing before we move off?
You can do whatever you want. Yeah, this is all about you. So what do you want to add?
Well, the thing that I did learn is, athletes have coaches, right? I realized that I needed a coach, and I did have a really empowering leader, but I realized that I was intimidated sometimes to go to that leader when you're asking questions or dealing with things. So I got involved in getting a business coach, and I invested in that. And that was so instrumental for me. And while I probably didn't get it right the first time, the coach that I have now, I've had her for about 6 or 7 years.
Oh, wow.
She was instrumental in my growth through, putting my name in the hat to be the CEO of Thrive, going through the merger, going through this change management. And so my advice to all of you is, athletes, you look at these professionals, they have nutrition coaches, they have mental coaches. We need coaches too.
We do. We need coaches in community.
Yes.
Right? Like, selfishly, I can plug the TLOP originator coaching community. It's just that, like, it gives people their tribe, but it also gives people access to thought leaders, to people who've been there already, who are already performing at a top level. And we're like, look, come learn with us, right? Like, come along, let us invest in you. And while you're doing it, why not hang out with a bunch of other people? Even if we're hanging out online, hang out with a bunch of people who want to do it. I'm happy you mentioned that because, none of us get to where we are alone. I mean, we just don't. And I love coaches, whether it's outside of business, a marriage coach, a parenting coach, sometimes just someone to go talk to because I'm lost in my thoughts and I need someone to help me organize those thoughts. We call them therapists or we call them life coaches, right? But they are all instrumental, yet it's sad how many of us feel like we're supposed to have all the answers and go at it alone.
And I think too, like being on the ops side, like I would have never thought that. Never thought like, why do I need a coach? I'm not a revenue generator, but what I did realize is my job is to support all the revenue generators, and I had big shoes to fill. And so I just think that's really important that, individuals that are looking to grow understand it doesn't matter what your role is. I mean, having a coach and having somebody, to your point, that you can kind of challenge you. I mean, don't find somebody that's going to tell you what you need to hear. Find somebody that's going to, I hate to say it, put a, foot in your ass if you need it.
Yes.
But if you wanted to grow, find somebody that's going to help you do that.
Perfect. So let's talk about the merger.
Yeah.
Right? Because it was national news. It was a big deal. I mean, look, anyone who's been following the Lower story, it's a really freaking cool story. Yes. I mean, I'm talking about raising $100 million, then going on a shopping spree because they purchased Thrive, they purchased they purchased Universal, they purchased Hamilton, and then they went and started buying tech companies like Neat Labs, and they went and purchased Movoto. Yeah. Like it's, just announced a national MSA partnership. Like it's a really cool time to be at Lower for those that want to put on a hard hat, swing a hammer, and build something that's we've never seen it before, right? We're building something new, or you guys are building something that the industry hasn't seen because you're focused on 2030, you're not focused on 2010. However, in order to get to where you are today, you went through, hey guys, by the way, we're selling your company. And whether it's a processing assistant, a loan originator, branch manager, or company owner, there are thousands that over the next 18 to 24 months are also going to experience, without getting into the nitty gritty and the stuff that they put on like NDAs, walk us through just your experience of your company being acquired, and what you and your team experienced, what you're able to go through, what you learned, what you would do different. Like, we don't have to do a deep dive and a 2-hour dissertation on this, but I'm just curious because I've never covered this topic before on the show. Optimal Blue is a critical tech partner powering a huge chunk of the mortgage industry. If you're a loan officer, you have almost certainly priced and locked a loan through the Optimal Blue pricing engine, even if you haven't realized it. They're the company that helps every type of mortgage lender stay competitive, protect margins, and move fast to keep pace with the market. Optimal Blue connects the front-end pricing that you rely on in your day-to-day as a loan officer to the secondary market, making sure every loan is priced accurately and backed by real-time data, so lending operations operate profitably and competitively, so they can continue originating more loans to help more home buyers. Optimal Blue has been doing this for over 20 years, and they've never let up on their commitment to continuous innovation for the benefit of lenders and the borrowers they serve. Bottom line, Optimal Blue helps lenders win more deals and keep more profit and originate more loans for more home buyers. Check them out at optimalblue.com.
Okay. So I would lead with this. I mean, even before we were making the decisions, we've had our own acquisitions where companies were not surviving, right? And so we actually had acquired a company even before our acquisition. We were even in the process of potentially looking at acquiring even another. And so
So you guys were buyers.
We were buyers.
Before you were sellers.
Yes.
And you were doing so after the market had done its like quick 180 downturn and things overnight got noticeably different.
Probably
and not
during-
different in a good way.
Yeah, and those companies really were not set up for. I'm going to say the I like to say the mortgage depression that
Yes.
we've gone
Yep.
through. And they weren't. They didn't have the infrastructure. They didn't have, I'm going to say the executive leadership and growing and how do you sustain. I mean, I hate to say it sustain because that's where they were. I mean, it wasn't even growing or looking at the 5, 7, 10-year plan. And so, looking at, behind the curtains there was just a lot of room for opportunity. And so, we did execute one of those acquisitions. And so kind of fast forward to, now my owner saying like, hey, I'm interested in this. I mean, obviously we didn't have to do it. And that's
Okay.
what I want to be clear on.
Yes.
Because at that point I had been very involved and acting and supporting the CEO and then even becoming the CEO and looking at like back, the main decision to build move forward was what was our executive leadership and what our ownership was willing to reinvest back to really not just survive but thrive. And I think that was the big decision to attach to Lower. Very like-minded organization in terms of, I keep going back to it, looking for better ways, looking for ways to invest. And I had a lot of ambition on terms of like the technology adoption. And I felt limited in terms of what could be done at the size that we were. So a lot of aspirations to keep having influence, not just in the walls, but even just like larger influence. And so that's what really got me excited. Well, to be clear, I was just as nervous and scared and all of those things. But I was attached to the fact that I could stay and keep doing what I was doing, but I don't know that I would continue to be challenged or I could show up for my origination and my teams in a long-term way.
Yeah. So for you all at Thrive, it was a strategic, well thought out decision.
Yes.
Right. Like you were looking at the numbers, you were paying your bills, you weren't having issues with your warehouse lenders, but you're looking at the future of mortgage lending. You're looking at, you are a future leader, both because you graduated the program, but also because of where you are in your life and your career,
Yes.
right? People like you and I, we still have another 15, 20 years that we could potentially invest into this industry. I would like to believe we are the future leaders, and there's even more future leaders behind us. But as a future leader, you're like, look, the industry is going one direction, consumer behavior is going one direction, and is this company going to be willing to reinvest back into it? Or is it a situation where we'd be better together, and by together with someone else?
Yes.
So you were the CEO at the time, and you made that decision. So would the first step be make sure you find a company that is aligned to your vision? Like if you're giving someone like advice about being acquired or putting themselves up for acquisition, or maybe even being the purchaser, right, and wanting to go out and acquire, is step one making sure that the person you're acquiring or the person you're selling to is in line with you in terms of culture and vision?
Yes.
Okay.
I think secondary to that is write down what are the top 3 goals that everyone wants to accomplish, buyer and seller, and write them down and look at them and have a conversation around them. Because that's important too, I think, in terms of like clear expectations. And then I think too, like if those expectations do impact the field, obviously most all of them do, your originators, your support, make sure you're communicating that. Communicate the vision, communicate what the goals are, and then most importantly, execute on those.
Yeah.
Communicate and execute on those. I think, and you're probably going to ask this, but I'll just tell you this. The thing that I would never do is tell people that nothing changes, because you want there to be change. That's why this is a conversation and why this is happening. And so I think too, it's coaching your team members through, there will be change, but again, here's the vision, here's the mission, here's what our culture is. Here's what our expectations are. Here's what we're hoping to accomplish both as buyer and seller. Communicate that well, and prep your team for change management. There is going to be change. There needs to be change.
Yeah. Well, nothing changes if nothing changes.
Yeah.
And you all were being acquired for a strategic reason, right? You're trying to be a part of the future. You're trying to elevate, go next level, and you can't continue running the same plays and running off the same playbook without that. So that was going to be my next question. You kind of touched on, but speak to the associates, right? Because you just gave great advice for the leaders, but to the associates, in one sentence or two, what would you tell someone whose company is being acquired?
Be open-minded. I hate to say, like, I don't even like the term trust the process, so I don't even want to say that. But, if that communication is coming to you in terms of like mission and here are the, goals and expectations with the change, I think just understand where you fit into that. And, no, you're going to leave an organization. I mean, I always say, like, if you're going to go start a new job and something, you're going to have that change no matter what.
Yeah, right.
And so what you're looking for is do you feel like attached and excited that these leaders are actually going to deliver to that and lean into that? But you have to be open and willing to change too. And, what I've heard a lot, and I think this is a bad mistake, and I think I'm going to use the term narrow-minded, is that, well, it's not the same. Well, it's not going to be the same. There is no way, there is no perfect match at the end of the day. I kind of feel about the same way with marriage. You're constantly working on your marriage. I mean, you might be very compatible, but there are certain things that you still have to work on both sides of it. And so I think a lot of times, the individuals that are impacted, it's like, well, this is so much. And well, yeah, it is. But again, focus on what the mission and what the vision is and what the expectations are. And if you can get excited about the direction of the company, then that's what I would gravitate to, and then just double down on doing your piece of it. And while the change management usually does last for a good 90, 120, sometimes 6 months, because you have systems changing, you've got even some vendors are starting to merge and make those change, just lean into that. And I always say, like, be a glass full kind of girl, not even half full, but just full. And lean into it, because, I mean, change is inevitable and it's everywhere in our industry. And quite frankly, there needs to be more of it.
Yeah. What excites you about the future? Like, what are some things that you're working on right now? Because, like, your role now is COO of Lower Mortgage, and Lower Mortgage is one of the fastest growing mortgage companies in America. What excites you? What are you working on?
I will say I would have loved to fast track this quicker, but I mean, obviously merging teams, merging systems, that's a lot. So now I'm getting into the fun stuff. So we are doing a lot with intelligent document processing. In short, it's like IDP, old technologies, OCR. So when we think about like the ingesting of borrower documentation and then the extraction of the data, there are still human beings that are doing that. Like, they're taking documents, they're putting it in a place, they're reading the documents, they're extracting the data, they're entering it in. That can all be done, like 95 to 98% of that can be done by technology.
Okay, by a machine.
By a machine.
Yeah.
And it gives you the consistency, gives you the scalability. And then foundationally to that, you can write logic-based tasks. And so I always say, like, if I can write it down and where it says, hey, if my insurance policy effective date is on or after this purchase contract date, then it's good. I don't need an individual, a very talented resource to be able to tell me that that insurance deck page is acceptable if I can write the logic, if the data is being extracted and it's consistent. And then you think about that foundation. There's so much that's happening with AI. And I don't even want to talk about like how AI is impacting our entire space here at Lower. But as it relates to like underwriting, there's some exciting stuff out there. And I don't think it's meant to be in addition to a traditional underwriter. I do think that there's certain loan aspects and certain loans that are low touch, low risk that can be an AI underwrite that provides the consistency. Yeah, you might have some error ratings, but those error ratings are still, present today
Yes.
with human beings.
Yes,
And so
human makes, they make errors too.
yeah, they do. And so there's just a lot of excitement there. So I'd say like the IDP, I think a lot of the, automation and the logic-based tasks and the exploration of AI underwriting is really exciting.
What's next for you?
Ooh, I mean, I think just really doubling down and supporting the growth here at Lower. I obviously attached to an organization that had large aspirations. I have to share this. One of the first things that Dan and Mike tasked me with was, go find, if there's something better than your current mortgage tech today, go find it. And they allowed the autonomy to do that. Guess what? That worked through my networking, my TMBA, my MBA networking. Did get connected with Neat Labs and had an opportunity to acquire Neat Labs, which is a proprietary, already pre-built tech stack. And there's a lot of excitement there.
Yeah, because you guys plan on rolling out that next year.
Yes,
right?
That's the plan. So Lower OS, and there's a lot of excitement there. I mean, it's going to be a change and a transition, but I think this mortgage industry is primed for change. I was hearing a lot in the MBA about people making changes to their tech stack. Probably first time I've heard it in the 17 years I've been in the business.
Wow. Okay.
And so I think originators just care about serving their customers, and then they care about operations, making sure that they can manufacture loans and close them fast. I think having a web-based, task-based, I'm going to say an IDP, AI type of mortgage tech is really important. And so I'm excited about that. And I don't know what keeps coming next. I know that there's pretty large roadmap for us to deliver on in the next 3 to 5 years.
So you have your hands full.
I have my hands full, but my eyes are always up.
Yeah.
My ears are always open.
Yeah. Last 2 questions.
Yeah.
What's one of the favorite books you've either read or listened to that you recommend to other business professionals?
Hands down. Oh, I have 2.
Okay.
I can have 2.
Yes, you can have 2.
Patrick Lassone's. Did I say that correct?
I don't know if I know this book.
Oh, really? 5 Dysfunctions of a Team.
Okay. I do know the book. Didn't know he wrote it. Okay.
Yeah. Healthy conflict
Yes.
is something that you should get comfortable in if you want to grow. Remember, managers do not promote people. People promote themselves. And so that's a really good book for that. But I will say the Extreme Ownership book.
Jocko.
Oh my
Okay.
gosh. And that's the best, like the audio version of that, because they go back and forth.
Is it Jocko reading it like this the whole time?
No, because
I'll rip your throat out.
Yes. But that one was great because that has really taught me, like, let's just say somebody doesn't close a loan on time and processor made a mistake. The first thing I'm going to do is I'm going to own it.
Yeah.
And I'm going to own it and what I can do to help that processor not make that mistake again.
And then the last question.
Okay.
You're a mom. You have a teenager.
Oh, gosh.
It sounds like you had amazing parents.
Yeah.
Probably had a good childhood. But what is something you had to learn the hard way through the school of hard knocks? It wasn't taught in your high school, wasn't taught in your college, maybe even wasn't even talked about at the dinner table or on the softball field with you and your parents, that you make sure your daughter gets from you, the knowledge, the information. Like, so much of the show is honestly the shit they didn't teach us in school, right? I called it the Loan Officer Podcast because it was everything I learned about life and business because I became a loan officer. It wasn't actually meant to be like a show that loan officers love. I love that LOs and mortgage brokers love the show. But in my mind, it was supposed to be like Dave Ramsey and Joe Rogan have a baby. And we're still marching down that path, but we lean hard into mortgage because the mortgage industry gives us so much love. It's hard for us not to. But when you're thinking, hey, I make sure that I tell all young professionals, all college students, or even my kids, like, what's that one piece of advice that you share?
I would say communication. That was probably not something that was super taught and done well.
Okay.
In my younger life, and I've learned that even through just 360 feedbacks and allowing people to give me feedback. And a lot of the things that I do really well are the same things that I think make me. I've heard the term intimidating or curt or aggressive or assertive. But those are the same quality traits that get results and help with the organization. And so one of the things that I've learned is just really kind of take a step back. And even as I'm parenting, it's really hard to not tell my daughter what she could have done better, like my dad did, but instead show up and say, I love to watch you play.
Yeah. So learn to be a good communicator.
Yes.
Yeah. Study communication. Yeah. It's an art. I mean, it is an art. It's a science. It's not necessarily a natural skill that we all have. Selene, if people want to follow you, they want to get a hold of you, what are your handles? How do you like to be contacted?
Probably LinkedIn.
LinkedIn? Okay.
Yeah, absolutely. Facebook, I keep it pretty professional. I do like to drip some stuff about my daughter. I'm very proud mom.
Facebook is all about her daughter, FYI. You cannot know Selene and not know she has a daughter who's a badass athlete who plays like every sport at a very high level, because yes, that is what you will see. You will have no idea that she's in the mortgage industry on Facebook. But if you slide into LinkedIn,
Yes.
yeah. So I'm the same. I tell people all the time, like, look, if you want to connect with me, first name Dustin, last name Owen. I'm all over LinkedIn and I'm highly accessible.
Yeah.
I, like you, keep my Facebook for my family. My family says, I didn't sign up to be a podcast guy. I didn't sign up to be one of the more influential people in the mortgage industry. You did.
Yeah.
So yeah, Instagram though, I'm at the Loan Officer Podcast. And I always tell people, go to my YouTube channel. A lot of people tune into us, right? So they'll listen to you and I today on Spotify or Apple. And we say thank you. Like, give us a 5-star review. By giving a review, you're letting other people know that this content's available, so they'll find it. You can always share it with people too, because that's how they'll find the content way easier. But when you go to our YouTube channel, which is at TLOP Entertainment, it's not just the podcast. Like, we have the DO show, we have Talk Mortgage to Me, we have the Home Stretch, we have Coach's Corner, we have all of this free content. But people can only get it on YouTube. They can't get all that free content on Spotify or Apple. But if you want to get a hold of Selene Kellam, it's on LinkedIn.
Yes.
Okay, so look her up on LinkedIn. Any parting words? Are we good to go?
No, one of the things I thought was really cool last night, though, is hear that an up-and-coming rising star originator had been listening to your podcast for 5 years.
There's a lot of them out there.
I like
yes,
that.
there's a lot of them out there. We appreciate it. You talking about Travis? Or
no, I think that was Landon Kale.
oh, Landon, yes.
Yeah.
Yes.
So it's just, again, I think just reiteration and lean into your resources, create that community, find that coach, and just double down.
Awesome. Hey, she's Selene. I'm Dio. That is all the time we have for you today. You've just tuned into the Loan Officer Podcast. We do look forward to catching you on the next episode.